Hi there, and welcome to Your Week Ahead with myself, Sinead McLaughlin. With me to discuss his thoughts and predictions on the events and data shaping the markets this week is Robert Howard. Robert, welcome to Dukascopy. Now, firstly, what main market events will you be following this week?
Well, so the main UK event risk this week is Wednesday's publication of the quarterly Bank of England inflation report, followed by the press conference hosted by Mark Carney. Obviously, the inflation report will update, give the latest updates on the Bank of England's economic growth and inflation forecast, which are expected to reduce both of them, to be honest, and the overall outtake from the inflation report is expected to be on the dovish side. Also, it's interesting. This week we've got at the end of the week we've got the German Q3 GDP number across the states. Obviously, after we had the payrolls report last week, so it's not quite as exciting for the states this week, and the next FOMC meeting is not till next month. Obviously, we had the ECB meeting last week, so again, that's not quite so exciting for this week. But yeah, I'd say the German number at the end of the week is going to be a big one.
This Wednesday, we'll see the Bank of England inflation report. Inflation has returned from above target and is now threatening to fall below target. Do you think the report will show this concern, and how will this impact the Great British Pound?
Yeah, well, so the risk that if inflation goes above 3% or below 1%, Bank of England governor's duty bound to write a letter of explanation to the UK Chancellor, and the way the trend is going, Mark Carney might have to get his pen out before, in over coming months, as certainly the risk is rising, because we've had UK CPI inflation fell to a 5-year low of 1.2% in September, so we're not far from that 1% floor anyway. Now, basically, against that backdrop, the Bank of England inflation report is likely to nudge Bank of England's inflation forecasts lower, which will basically underpins the view of the MPC majority that we don't need to do anything. They don't need to do anything on interest rates yet, because it would seem slightly confusing if they were to raise interest rates and inflation continues to fall, and then Mark Carney has to write a letter explaining why inflation is below 1%. So it's he may well have to write the letter without obviously the Bank of England having raised rates, but it would put him in a very difficult position if they raise rates and then he has to write a letter explaining why inflation is below target.
With reference to a European slowdown, German preliminary GDP is out on Friday. Do you think Germany can avoid a recession, or could there potentially be 2 consecutive quarters of contraction? What will this mean for the outlook for the euro?
Well, the Reuters poll median forecast for the German quarterly number on Friday is for a very small positive of 0.1%. Basically, so if we do get a negative number, that will be bad news for the euro, because obviously with Germany being the motor of or the engine of eurozone economic growth, if Germany has fallen back into recession, I mean that's bad news on the economic front, and it will also have the knock-on effect of increasing the probability that of the ECB launching quantitative easing somewhere down the line. Interestingly, the Reuters polls come out today. It says there's a 50% chance that the ECB will buy sovereign bonds, according to Reuters poll of traders, that is. And so, for example, if the German GDP number on Friday disappoints and basically comes in negative, then I suspect that number would probably go up from 50% chance to perhaps 75% chance.
Thanks, Robert. Great to speak with you. That's all for your week ahead, but don't worry, the Dukascopy TV website is regularly updated, so do stay tuned.